Welcome to the deep dive. We cut through the noise to get you the essentials.
Today we're looking at Delta Airlines Q3 2025 results.
Yep, and the mission is simple. Give you the key numbers fast and figure out what's driving their pretty optimistic outlook for the rest of 25 and into 26.
Let's get straight into it.
Okay, the immediate scorecard. Delta didn't just meet expectations, they kind of blew past them. Q3 adjusted earnings per share, $1.71.
Which was what, $1.53 expected? So nearly a 12% beat. Pretty significant.
Right, and revenue.
Also strong. Adjusted revenue hit $15.2 billion against $15.06 billion expected. That's 4.1% year-over-year growth. Shows people are still spending on travel.
Definitely. And that feeds right into their guidance for the rest of the year, which looks, well, quite bullish.
It really does. For Q4 2025, they're projecting adjusted EPS between $1.60 and $1.90 per share.
And the consensus was only $1.65, right? So they're guiding higher.
Exactly. Way above the average estimate. And Q4 revenue, they're expecting 2% to 4% growth. Wall Street was only looking for about 1.7%, so get higher.
And for the full year,
They updated the full year 2025 guidance to approximately $6 per share. That puts them right at the top end of the range they gave back in July.
which, when a company keeps raising guidance like that quarter after quarter, it suggests something structural is going on.
Precisely.
Uh.
And CEO Ed Bastian basically said as much. He mentioned they're well-positioned to deliver top-line growth, margin expansion, and earnings improvement consistent with our long-term financial framework.
That sounds like confidence not just for Q4, but looking well into 2026.
Yeah, it sets the tone. They see these trends sticking around.
Okay, so that's the what. Let's get to the why. Why is Delta doing so well when others face the same headwinds like fuel and labor costs? What's the secret sauce here?
Well, if you had to pick one thing, it's premiumization. It's a fundamental shift.
Premiumization. Let's break that down because the numbers are pretty striking. Premium travel, first class, Delta One, the roomier seats, it just keeps outperforming the main cabin.
Massively. Premium revenue in Q3 was up 9% year over year, hit nearly $5.8 billion.
Okay, 9% up for premium. And main cabin.
Actually fell 4%, down to about $6 billion.
Wow. Okay, wait. Premium up 9%, coach down 4%. That gap is closing incredibly fast. Are we saying it's not really a mass transit model anymore?
That's the huge insight. Delta's president, Glen Hauenstein, basically projected that premium revenue from those upscale options is actually on track to beat main cabin sales next year, 2026.
Main cabin. That's an inflection point.
A massive one. These premium products, they used to be seen almost as loss leaders, right? Or just perks. Now, they're the highest margin products they have, period.
And the cost to deliver that premium seat versus a standard one isn't proportionally higher, I imagine.
Exactly. The marginal cost is relatively small, but the revenue jump is huge.
Yeah.
So every premium sale has this outsized impact on margins. It insulates them more from, volatile fuel prices or tough labor talks that hit the standard economy side harder.
So shifting the mix towards higher paying customers makes sense. What about the loyalty program? That always seems like a huge profit center.
It absolutely is, almost like a hidden financial company. Loyalty revenue grew another 9% year over year in Q3.
And the Amex deal.
The money from American Express, just for using the SkyMiles brand, up 12% to $2 billion in one quarter.
$2 billion just from the credit card partnership.
Yeah, driven by people using those co-branded cards. They're heading for $8 billion this year from Amex and aiming for $10 billion soon.
$10 billion. That's just incredibly stable revenue, isn't it? Almost independent of actually flying planes.
Pretty much. It's like pure profit, tied to banking fees and spending, not really affected if a flight's delayed or jet fuel spikes. It's a massive cushion, a huge competitive advantage that others don't have at that scale.
Okay, and the other piece of the premium puzzle, business travel. Is it really back?
It seems to be. Corporate sales grew 8% year over year in Q3. And importantly, that growth actually accelerated through the quarter, hitting 9% towards the end.
That acceleration is key, right? Shows it's not just a blip.
Exactly. And the surveys back it up. Around 90% of companies apparently expect their travel volume to increase or stay steady in 2026. That's up from last year's surveys.
So businesses are feeling confident, opening the wallets, feeding right into Delta's premium seats and those key coastal hubs.
That seems to be the picture.
Okay, strong revenue story driven by premium and loyalty. But you only get margin expansion if costs are under control too. How did they manage on that front?
Really tight discipline there. Non-fuel unit cost CANSIMX growth was just 0.3% in Q3. Tiny.
Just remind us, CANSIMX is cost per available seat mile, excluding fuel. the core efficiency metric.
That's the one. Measures how efficiently they fly each seat, mile by mile, without fuel price noise. Keeping it near flat is impressive.
How'd they do it?
Better scheduling, optimizing the fleet, keeping planes full, and flying more. It means their year-to-date CASM-ex growth is under 2%, right in line with what they promised. They delivered on efficiency.
And then there's capacity. We've heard a lot about airlines, including Delta, cutting unprofitable flights, midweek routes maybe, oversupplied markets.
Yes, that capacity rationalization has been crucial, pulling back on flights that don't make money. The result? Less competition in Delta's main hubs compared to last year.
Less supply means better pricing power.
Exactly. As they put it, it leads to a very healthy supply-demand balance across the industry into 2026. They don't have to discount as much, which protects those margins.
And the balance sheet, does it support this long-term picture?
Oh, yeah. It's looking really solid. They generated enough cash to pay down almost $2 billion in debt so far this year.
Which helps leverage.
Right. Gross leverage is down to 2.4 times earnings. That's quite low. Gives them a lot of flexibility. And free cash flow guidance for the full year was bumped up too, now $3.5 to $4 billion.
Free cash flow, the money left after all the investments. Hitting that high end shows serious cash generation.
Definitely. Strong financial footing.
Which brings us back to the big picture. When the CEO says Delta might drive something like 60% of the whole industry's profits this quarter, that points to a major split, doesn't it? A bifurcation.
It really does. And it feels structural, not just a temporary thing. It's about who controls that premium experience. The reliable flights, the good product, the partnerships, the profitable international routes. Delta's invested heavily there.
And the other end of the market? The low-cost carriers.
They're facing more pressure, higher labor costs, maybe finding it harder to get capital for new planes. It forces them to cut capacity too, and Austin raise fares just to cover costs.
Huh. So the struggles at the low end might actually be helping Delta indirectly by setting a higher price floor.
That seems to be part of it. By pulling seats out and charging more, the low-cost carriers reduce some competitive pressure, especially domestically. It actually helped Delta's main cabin domestic revenue turn positive in Q3, maybe a bit sooner than expected.
Interesting. A sign the industry is really splitting based on quality and experience.
Yeah, differentiation is key.
And Delta keeps investing to justify that premium price. What specific things did the sources mention?
Well, they're pushing ahead with those exclusive Delta One lounges. New York, LA, Boston, Seattle. Big investments there. They've got that partnership with Uber for smoother airport transition.
The curb to gate thing.
Right. And onboard, nearly 1,000 planes now have the fast, free Wi-Fi for SkyMiles members. That's a tangible benefit people value. Makes paying extra feel worthwhile.
So wrapping this up for you, the listener, Delta posted a strong Q3 beat, gave really positive guidance for Q4 and the full year, and it all seems built on the structural shift towards premium travel and that massive Amex loyalty income.
Yeah, this strategy seems to be insulating them pretty well and driving consistent margin growth into 2026. The core takeaway is their success in getting customers to trade up, moving away from air travel as just a commodity.
They're chasing the high end, and it's working. So here's something to think about. With business and luxury demand so strong, and premium revenue set to actually overtake main cabin revenue by 2026, what happens next for the standard economy cabin? Will we see more innovation there, or does the whole industry just keep shifting its focus exclusively to the highest-paying travelers?
It's a fundamental question, isn't it? If premium is this profitable, what's the long-term future for the basic coach seat? How does that model survive?
Something to ponder? We'll catch you on the next Deep Dive.